This 2.5-kilometer bridge in Baltimore collapsed in a matter of seconds, but its catastrophic consequences are set to stretch out across the world for weeks. On Bloomberg Markets Asia, we explore how it's impacting supply chains and the shipping industry. It's almost 11 a.m. in Sigma Shanghai. I'm Haslinda Amin. The other top stories. The yen falls to the lowest level in about 34 years against the dollar, raising the risk of an intervention. Caution in Asian markets after U.S. stocks wiped out intraday gains. Investors getting increasingly nervous about the rally that stopped $4 trillion this year. Meanwhile, Thailand's equity markets see no revival in sight as the economy and corporate earnings slow, political uncertainties adding to the dim outlook. And we speak exclusively to the founder and group CEO of one of Thailand's largest companies, Indorama Ventures, on whether he sees sentiment turning around. Let's start with a look at how markets are shaping up. Asia pretty lackluster after the S&P wiped out all gains. In the final hour, traders taking profit, tweaking portfolios after a massive rally topping $4 trillion. Do keep a watch on that PCE report coming out on Friday, the Fed's preferred inflation gauge. The Nikkei has had a stellar run, 20% up year to date, on track for one of the best quarters ever, by the way. Yen getting smacked lower since 1990 versus the USD, getting ever so close to 152, where we saw intervention at the very last time. Currently at 151.87, and China in losses as we await earnings this week from the likes of ICBC, BOC, and more. We have the yuan. Traders pretty much confused as to what the PBOC is doing with its fixes. The yuan at 725.69. Now, the owner of the ship that rammed into Baltimore's Key Bridge could face hundreds of millions of dollars in damage claims. But legal experts say invoking an obscure 19th century law could reduce its liability. For more, let's bring in Bloomberg's Bruce Einhorn. Bruce, the very latest, what are we seeing?
Well, regarding the liability issue that you just raised, yes, there is the potential for hundreds of millions of dollars, but there is also the potential of the owner of the ship using this obscure law from the mid-19th century, which could really cap its liability in the tens of millions. This is a law that was used by the owner of the Titanic after that ship went down to limit its liability. For now, of course, the focus is on the rescue efforts. There are 6 people missing, presumed dead. The question also then will become just how to deal with just the short-term chaos that will stem from the collapse of this bridge. There's going to be massive disruptions for traffic in the area. Of course, Baltimore, part of the corridor between Washington and Boston, so a lot of traffic goes back and forth there, all up and down the eastern seaboard. The port itself is the largest port for handling autos and light trucks in the United States. It's the second largest port for export of coal. So there's going to be a lot of diversion to other ports in the Northeast, also to the West Coast, as everybody tries to cope with what's likely to be weeks, if not months, of fallout from this.
And Bruce, Biden vowing federal support. What do we know?
So this is going to be a very expensive repair job. This is a bridge that was built in the 1970s. The price then was under $200 million. It's likely to cost several $billion to replace it. The president said that he will ask Congress to pick up the tab. It's unclear just how quickly that would happen. Things don't happen fast in the United States Congress, so we'll have to see. And even if Congress does agree to fund it, of course, building a bridge is pretty complicated. So there's going to be a long time where there's going to be major disruptions.
Bruce Einhorn, we thank you so much for your insights. Now, the bridge allows commercial ships to enter the port of Baltimore. Avril Hong joins me in the studio with more. And what are we looking at in terms of impact to supply chains, which, by the way, are already pretty fragile?
They are, because of the pandemic, and they're just about recovering from them. And then we also see how this port is the most important on the U.S. East Coast, among the most important, as Bruce just highlighted earlier, very important for coal exports as well. That's just the port side of things. If you take a look at how many people the bridge actually ferries in a day, about 35,000, and the trucking industry is already flagging some of the impact because of the damage to the infrastructure. We're hearing about how these disruptions could last as long as 6 weeks. Let's take a closer look at just how important this port is. It is the largest in the US for when we look at the cars as well as the light trucks. It also handles a lot of coal and sugar, coffee, that all passes through the Baltimore port. Now, a lot of the coal that leaves the Baltimore port actually heads to India. So we could see that ramification closer to home here in the Asia Pacific. And earlier, we heard from S&P Global Commodity Insights Global Head of Shipping, Rahul Kapoor, for his views. Take a listen.
Coal exports particularly, right? The Port of Baltimore last year sent around 25 million tons of US coal exports, right? That's the biggest market in our view which is going to be impacted, right? That's probably going to have an impact on the coal prices. In the global markets, supply chains are agile, right? So they will be able to divert ships. They will look at the Port of Savannah, New York. In the medium term, there's an impact, but if you look at a slightly longer term time frame, I think they will be able to basically able to absorb the impact of what we are seeing right now in the Port of Baltimore.
Hearing there from Rahul Kapoor, Has.
Yeah, that's right. And you got to wonder, the outlook for coal prices, for shipping prices.
Yeah, that's something that we're going to be keeping a really close watch on. But so far, what observers have been saying is that for global coal prices, we might see a bit of a limited impact. If anything, we will see more of an impact for the Asia market, just because the coal that leaves the Baltimore port is high in sulfur, and that means that they're not suited for the European markets. And on top of that, the Baltimore port also handles just a fraction, about 2% of global seaborne coal. Still, we'll be keeping a close eye on those coal prices, but let's also take a look at shipping rates. We saw not so long ago how the Suez, the Panama Canal disruptions really led to that spike in shipping rates. Don't forget the Red Sea attacks. So all that's going to be digested. It really also depends on how long this disruption lasts for.
That's right. We'll have to wait and see over the course of several weeks, perhaps even several months. Avril Hong, thank you. Let's discuss the impact of the Baltimore Bridge collapse on the shipping industry. Joining us exclusively, Khalid Hashim, MD of Precious Shipping, a ship owner providing global dry bulk transportation services. Khalid, good to have you with us. We know that you have a ship just about 900 meters away from where this happened. I mean, what are you gleaning from that?
Well, firstly, the human tragedy which has taken place, this was minimized by the ship actually sending out a Mayday signal, and that helped the shoreside authorities to actually take action and close down the bridge to traffic. So just a few people were involved, but then for all those and their loved ones, this is going to be a real disaster. So that's the first issue that has come out from this. In terms of the impact, I think Rahul has just mentioned that 25 million tons of coal are being exported from Baltimore. Now, if that coal is not available for some time, this will have an impact on the coal suppliers in Australia and Indonesia, which will then have to take up the slack and send the cargo to India. For the short term, it will be ton-mile disruptive. It will not it'll have a negative impact on the market for the time being, because the coal will be shipped from Indonesia or Australia, which is much shorter ton-mile distance than shipping it from Baltimore. So that's the immediate impact from the stoppage of this port from exporting.
Khalid, we see ships collide often enough. We see accidents often enough. Is it different this time around? What might be some of the causes for the incident this time?
I mean, it'll be pure speculation to comment on this, but the possible causes, at least from what we have seen so far on the videos that are available, is that there was some sort of a power blackout on the ship, and there was a plume of smoke that came out from the funnel just 3 minutes before the collision with the bridge. And the ship, though it was proceeding on a perfectly good course, suddenly veered to the right and hit the bridge. So it seems in the last 10-15 minutes of its journey before colliding with the bridge, something went wrong on the ship. So nobody really knows. Singapore authorities are already on their way to help the Baltimore authorities to figure out what went wrong and to make sure that such an accident never takes place again. So I think that report will take some time to come out, but till then it'll be speculation on some sort of a fuel issue, that maybe the fuel was contaminated, which the ship had taken. That is one possibility. Second possibility is that the engine, one of the engines, auxiliary engines that power the ship, broke down. So that is the second possibility. And of course, human error. Most accidents take place because of human error. But on this one, with 2 pilots on board and the whole bridge watch from the ship's side, I doubt if there's been any human error on this one.
Might we see widespread rerouting of ships, and what might be the impact be on global trade?
Global trade, in terms of what how it impacts, say, dry bulk, I'll just speak about that. There is going to be an impact. Like last year, global trade grew by 4.83% in ton-mile terms. And right now, as of date, Baltimore has exported 0.8% of world trade. So you can see that it will have some impact. It's going to have a 3.2% impact of lowering it if it stays shut for 1 year. But at the same time, if it stays shut for 1 year, all the other ports on the East Coast, which are capable of shipping out coal, which is the main dry bulk export from Baltimore, then that will limit the impact of the shutdown of Baltimore. And I think that they're already starting to reroute ships into different ports on the East Coast. And in fact, New York is saying that they will welcome the container ships that are coming in, and they will make sure that they're already in dialogue with the Port of Baltimore to understand how best to service the American customers by getting their cargoes off the ship as quickly as possible.
Khalid, of course, this accident happening against a backdrop of rising geopolitical tensions and risks, including in the Red Sea. How are you assessing in terms of perhaps additional costs for companies, for shippers?
I think the cost will not be that significant because if the ships are rerouted to the other East Coast ports, it's not that much of an extra distance of sailing. So there will be some sort of marginal increase in cost. But more than that, I think there may be congestion created at these ports, which are already handling their own cargoes, and not to suddenly be confronted with more cargoes coming out from because Baltimore is shut. So that will create some sort of congestion and will retain ships for longer during these journeys, and therefore will be ton-mile will be actually positive because it will shrink the available supply of ships.
Khalid, thank you so much for joining us today. Khalid Hashim, MD of Precious Shipping, with his assessment of what's happening in Baltimore. And of course, we have breaking news right now. We have Japan reacting to the weakness in the currency, inching ever closer to 152. We have Suzuki saying that Japan will not rule out any options to support the currency. It will take bold action against excessive FX moves. And that, of course, in reaction to where we are in terms of the currency, the Japanese yen trading 151.77, ever close to that 152 level, which we saw intervention the very last time. Suzuki saying that he is watching market with high sense of urgency. We have Japan saying that it will take bold action on FX if necessary. The yen currently paring its loss against the dollar after the comments from Suzuki. Well, still to come, more analysis on the Baltimore Bridge collapse with law firm Dennis Matthew. We discuss the impending legal battle over who ends up paying for the damage later this hour. Plus, our exclusive interview with the CEO of Thailand's second largest chemical maker, Indorama Ventures. Their outlook on the global industry just ahead. Keep it here with us. This is Bloomberg. Welcome back. We're keeping an eye on the yen paring losses after Japan said that it will take bold action on the currency if needed. It will not rule out any options and that it will suddenly take bold actions if needed. It's watching the market with high sense of urgency. Of course, we have earlier the yen inching ever close to that 152 level where we saw intervention before. Let's bring in Laura Fitzsimmons, head of Australia rate sales at JP Morgan. Laura, your thoughts on that warning from Suzuki saying that it will take bold action if needed?
Yeah, so definitely the development continues. We had seen really a step up in the jawboning over the last few sessions, but it does seem now that we would be approaching level 4, which is where we have seen intervention occur in the past. Yesterday we were still at level 3, but I think as we get more and more heightened here in terms of the tone, we could expect that at any moment. And obviously the move towards 152 earlier in the session clearly prompting that.
Will it be closer to 152 or 155, some say? I mean, how are you looking at it, especially on expectations that the Fed will move and perhaps, you know what, Japan just needs to wait out on the Fed?
Yeah, so we had been talking around what sort of levels make sense for people to try to fade this move if and when it happens, because clearly that has been a good strategy over the last few months when needed. As we approach the holiday weekend in certain parts of the world, and also the fact that we have some key US data coming out when the markets will be closed, I think there is definitely a heightened concern around the kind of volatile move that you could get around the intervention. And for that reason, I think traders will probably be scaling their offers a little bit higher than maybe would be expected, just in case perhaps they allow it to extend a bit further than expected, and no one wants to be caught too early.
Suzuki says that Japan will not rule out any options. What options are there?
Well, I think we've learned from the past that there aren't that many options left, and this has clearly been one that's been deployed before. I don't think the market's expecting anything new in terms of a mechanism here. I think it's, that what we've seen in the past will be exercised again, but certainly coming off the back of the first rate hike in 17 years last week, this is not really the situation that the Ministry of Finance wanted to be in.
Apart from the yen, the yuan is also in focus. I mean, a lot of traders are now wondering what's the tolerance level for yuan weakness. How are you reading, where the yuan goes from here, especially on the back of what we saw in terms of fixing on Friday?
Yes, we do believe overall that using yuan weakness is not the way to really, work out of the deflation. So I think at this stage, I think the market clearly was surprised a lot on Friday, and that was certainly the discussion to start the week. But we are expecting, somewhat more stable fixings closer to where expectations should be, rather than a move like Friday.
So how much weakness do you think the PBOC is willing to tolerate?
I think at this juncture, we can allow a bit more, but certainly we don't expect anything too meaningful from here. Obviously, traders are looking towards the levels of 725, 730, but beyond that, I think, I'm not sure that we're really seeing much positioning, apart from obviously what we might see in options space, but certainly in terms of cash positioning, it's the expectations are more for around these levels in the short term.
And speaking of tolerance, Laura, is there a sense that the Fed is willing to tolerate 3% inflation? I mean, what are you looking at?
Sure. So I think, what we saw last week from Chairman Powell was clearly more tolerance than was expected by the market. In terms of that press conference, the dovishness, the looking through of the January and February CPI prints, there was certainly, I would say, more patience in letting this disinflation story play out. And certainly it does seem at this stage that, he's not backtracking. He thinks we're on track largely. And for that reason, I think for the Fed at this stage, unless we see see some really meaningful upside surprises, we do still think that first rate cut is going to come in June, and we are expecting 3 to come this year. And if anything, house view would probably err on the side of more cuts than that, than less, which is interesting because I think the market would probably be facing the other way. A lot of people were burned to start the year in terms of dovish rate cut bets on the Fed, obviously looking for that March cut. But, I think the market is also nervous that even June could be in doubt, obviously, if you do get those strong prints. But that's not within our expectation at the moment. So we do remain fixated on June. And I think for now, the market has been impressed by the Fed's tolerance so far.
Right. So how are you positioned, Laura?
Sure. So I guess one of the trades that people do like is steepeners, obviously in the bond curve in the US. Now, these are trades that really people have been running actually for quite some time. And you might have thought that perhaps there'd be more vindication last week after Chairman Powell's press conference in terms of that tolerance. But clearly with that longer run dot also rising slightly, although that was within expectations. But clearly this is a setup that makes sense for a steepener position in terms of, rate cuts potentially coming sooner than even the inflation numbers are allowing, but certainly the risk that in the longer run, the market could be allowed to run a little bit more hot, and obviously we've been upgrading growth and even inflation forecasts. So from that perspective, the steepener makes sense. The one thing we worry about is the fact that, as I said, these are trades that people have had on for some time. We haven't seen a lot of new money put towards that trade in the last week, which suggests to us that conviction is lower than you might have expected after that press conference. For that reason, we do think that the positions probably do make sense over the longer run, but here and now, I think the market is a little bit unsure. I think what we've seen in terms of data misses, like if it's 0.1 on a CPI or PCE, etc., I think the market gets very, very concerned, and we can really have some outsized moves. So conviction levels are rather low, and I think if anyone wants to run duration at these levels, they're a little bit more cautious. So playing it via the steepeners or just playing in the very front end space.
Laura, thank you so much for that. Laura Fitzsimmons of JP Morgan. Plenty more ahead. Keep it here with us. This is Bloomberg. And China's big banks are set to report earnings starting today. We'll be watching for results from the likes of Bank of Communications and ICBC in the coming hours. And let's look at the other lenders posting results. Let's take a look where we are in terms of those China bank plays, how they're doing today. Of course, this is a day when there's a lot of caution, but Bank of China currently unchanged. ICBC, Agbank, well, it was slightly in the positive. China Agbank maintaining its gains by 0.3%. Those Chinese banks due to report later today. Of course, we're also keeping an eye on China property plays. Poly Property Services jumping more than 10.5%. Of course, it's rising after its 2023 profit jumped. We're also keeping an eye on Greentown Services advancing after its 2023 profit increase as well. In terms of earnings to come, we're keeping a watch on the likes of GDS, BYD, Nongfu, Mengniu as well. Those stocks in negative territory. In fact, GDS slumping almost 26% right now. Plenty more ahead. Keep it here with us. This is Bloomberg. Here with Bloomberg Markets Asia. Now, Chinese tech shares under pressure as Alibaba signals a shift in strategy. Let's get the very latest. Avril Hong is on watch. Avril.
Yeah, Has. Investors not liking the sound of Alibaba's latest plan to scrap the listing of its logistics arm, Cainiao. And this comes just less than a year after it did the same for its cloud unit, scrapping the listing and the spin-off. And that was really a bit of a head-scratcher as investors tried to come to terms with what exactly Alibaba's strategy was here. Of course, the most recent scrapping is as market conditions sour and it really recalibrate of whether it's going to be listing some of these units in Hong Kong. Now, this is a company that has really seen very intense competition from the newer companies such as Pinduoduo. It's also seen its share price fall since a peak in 2020 of about 300 plus Hong Kong dollars. Look at where it's sitting today. And all this is amid the intense competition as well as some of these strategy missteps. Let's take a look at what perhaps its strategy is. The initial plan for Alibaba, let's recalibrate here, was to split the company into 6 divisions, and that these divisions could help to raise capital. Now, given the most recent listing as well as what we saw from the cloud unit last year, it seems that it's kind of doubling down, channeling its energies towards its main e-commerce arm, and it's also offloading some of its non-core businesses. So this is what's at play for Alibaba today.
All right, Avril Hong, thank you so much for that. Let's pivot to Thailand. A market revival in Thailand doesn't seem to be coming. The country's benchmark stock index is set for its 5th quarterly decline. Foreign funds are selling, and the baht is the second worst performing currency in Asia. Now, data compiled by Bloomberg also show that analysts have cut corporate earnings estimates to a 2-year low. All that, along with slowing economic growth, means Thailand is becoming the least attractive market in Southeast Asia. Well, for more on the market sentiment in Thailand, we're joined exclusively by Alok Lohia, founder and group CEO of Indorama Ventures. It's Thailand's second largest chemical maker by market value and among the world's top 30 chemical companies. Alok, good to have you with us. First off, is Thailand losing its luster?
Not at all. Not at all. Thanks for having me here. I think the corporate earnings are down for us and for our industry. And these are the factors of the last couple of years. You know, the last 4 years since COVID have not been the easiest years. And we've seen big swings in earnings. But as far as Thai market is concerned, I think it follows the earnings. So I'm very hopeful.
So in terms of earnings, what's the outlook for your own company, Indorama? I mean, it's been a challenging year for petrochemical companies as a whole. How's the outlook looking?
It's getting better. We are seeing the first quarter better operating rates. Margins are still low, but once the operating rates pick up, that will bring earnings for us. And I see that steady climb through the rest of the year. And I think over the next couple of years, as the oversupply gets consumed in the marketplace, then it'll take a couple of years for the markets to balance.
You've talked about a fundamental shift in the chemical markets globally. What do you mean by that? What's changed?
Well, one of them has become more intensified, I think, on the climate talks. You know, it's been in chemicals, climate plays a big factor, and decarbonization, shifting into more sustainable materials. So those are things that have been brewing up, and as time passes, we are getting nearer to deadlines. So that is one big shift that is shaping the refinery business of the chemicals, which means that in the West, with peak oil hitting, there is no new refinery built, and therefore there's a big distortion where Asia is versus where Europe is, for instance, especially in the refinery market.
Right. So, Alok, how are you navigating all these changes?
Well, you know, this new era, I would call this a new era. The era since GFC, where interest rates were low, is a different market dynamic to where we are today. I think interest rates are high and will remain so for the time being. But at the same time, you know, with China playing out its self-reliance card, building a lot of capacity, that does lead to oversupplied markets globally. So between the two investment opportunities, we at Indorama, we have made a big financial policy change that rather than going for growth through debt, we are going to go for growth. We'll continue to be a growth company, but rely more on our free cash flows. And In order to help our free cash flows, we have to improve the quality of our earnings, not depending on margins in an oversupplied market. So margins are not where we are dependent on. We are just making sure that we are tightening our belts, getting our quality of assets improved, even reducing our capacity for capacities that don't earn its cost of capital. So a couple of things, management actions that are already announced, and over the next 3 years, we think we'll get back to our peak earnings without the help of any margin improvement.
Right. Would that growth also entail M&As? I mean, we know that Indorama Ventures has been a pretty acquisitive company. Are you planning any M&As?
It's going to be a combination, Haslinda, because since I'm not going to go for debt-funded growth, my financial pivot is that I'm going to keep my net debt EBITDA below 3 times. And for that to happen, I need to rely more on free cash flow-led growth. So which would be first, improve the earnings, get the free cash flows, get the leverage down to below 3 times, and then going forward, use the free cash flow to aid growth, which will be both organic as well as inorganic.
How about in terms of the industry as a whole? What kind of M&A trends do you foresee in the petrochemical sector?
I don't see as many. I mean, where I see opportunities is that there is a lot of partnership talks going on. Because let's say the IPO markets are not as robust as they used to be. So there are opportunities out there for people to combine their businesses and grow the businesses, get more competent in their cost competency. It's all about how do we create better shareholder value and how do we create better customer value. For both of this, we need to have a good competitive asset. So we are basically relying on our moats. In Americas, we are doing very well. Europe is a concern, and we are fixing things in Europe as we speak.
Look, we know that you want to float 2 of your businesses. What exactly is the thinking behind that, and where exactly are you intending to do that?
One of the businesses would be listed in the West, most likely in the US, just because the peers of that business, the dynamics of that business, are more Americas related for us. And that's where we see that if they do a float in the US, they get their capital for their growth. It's a business that has grown for us over the last 5 years, multiple fold. And that continues to be the business that we think is going to rival our core business of PET. So that is the reason why that float will happen most likely in the US or in Europe.
So one in the US or Europe and the other in Thailand on the SET?
The other in Asia. Could be Thailand, where we are already present, and that business has it's a packaging business. A packaging business is a good growth business. It did not suffer any of the consequences of the last 2 years, when destocking was taking place. So that is a business which is nearer to our customers' needs, and I see value in that business. Again, to grow that business, have its own management, have its own balance sheet.
Alok, just one final question. We know that Thailand is putting to a vote a bill that allows same-sex marriage. In terms of diversity and inclusion on a corporate level, from your company level, how are you looking at that?
Our DEI policy is well established. We are a global firm. We are in 35 countries, Haslinda. So our sentiments are that we encourage diversity. So our policies are set, and having I believe some 60 nationalities working in the company, I think we are open. We are open to that, and we encourage it as well.
Alok, thank you so much for being with us today. Alok Lohia, Indorama Ventures. Now, as we mentioned, in Thailand, a bill to legalize same-sex marriage could face a vote in Parliament later Wednesday. The bill seeks to legalize marriage for same-sex partners aged 18 and above, along with rights to inheritance, tax allowances, and child adoption, among others. Approval would make Thailand the first country in Southeast Asia to establish marriage rights for gay and lesbian couples. Well, coming up, more analysis on the Baltimore Bridge collapse with law firm Dennis Matthew. We discuss the impending legal battle over who ends up paying for the damage later this hour. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia. India starts trading in just about 2 minutes and futures pointing to a higher open. Ain't too shabby when you consider that Asia as a whole is just marginally higher by 0.2%. The Sensex index pointing to a higher open, 0.2%. Futures currently flat. Now back to our top story. The collapse of a bridge near the port of Baltimore will have impending legal implications as one of the busiest ports in the mid-Atlantic grinds to a halt. Let's discuss this with Matthew Krista Raju, partner at Dennis Matthew. His main areas of practice are shipping and admiralty law. Matthew, good to have you with us. First off, your take on the legal fallout that is likely to happen here.
Well, investigations, I suppose, would have just started. It's a bit to go and find blame now at the moment. It's premature. However, as we have seen from the videos that there was some engine failure before the vessel hit the bridge. So it's not a straightforward collision in that sense, right? So there are some issues to consider. And if you were to look at possible parties who were negligent, the first person you would look at would be the master of the vessel who was in control of the vessel at that time. I'm sure there was also a pilot on board. And if there was engine failure, there will also be questions regarding the vessel's engine condition, whether it was maintained properly, or if there was, in fact, a defect in one of the equipment on board the vessel, which caused the vessel to suffer a blackout. So there could be potential liabilities of the manufacturers of the equipment as well. So these are generally some parties that would be considering their positions at the moment.
In terms of liability, people point to that Titanic law, which limits the liability that may be faced by ship owners. I mean, how are you looking at this and how might this play out?
Okay, so the collision took place in the U.S. territorial waters. So one can argue that the U.S. laws apply to this collision. However, the owners of the vessel are incorporated in Singapore. So the owners of the vessel would say that I'm a resident in Singapore, so all lawsuits should be directed to me in Singapore, and I would like the laws of Singapore to apply. So there would be a fight for a suitable forum, depending on where you stand. If you're a claimant, you would want a higher limit of liability. If you're a paying party like the owner, you would want a lower limit of liability. So the limits of liability in the US are different from the limits of liability in Singapore. And also there's this other possibility, even though the limits could be lower, there could be better chances of breaking the limits under certain circumstances. So you have to consider all this before deciding where a party would like to start their claim or where one party would like to limit their claims. So these are all early days.
So,
and parties, yes, go ahead.
Right, early days you say, but what kind of lawsuits might ensue from here? I mean, we have the bridge owner, for instance. People may sue for emotional distress, personal injuries. In terms of lawsuits, what can we expect?
Okay. So to start with, of course, the owners of the bridge will say that they have lost the bridge. So there will be claims for that. And then there will be people who were using the bridge at that time who may have suffered some losses. I understand that it's quite sad that some lives were lost. So they would also be making some claims. And next to the owners of the bridge, at the moment, there's a blockade because the bridge has stopped traffic from passing through the narrow channel at the river. So there are ships that are stuck upriver, which cannot come out, and there are ships that are stuck outside of the river that cannot go into the terminals that are upriver. And the terminals themselves would have suffered some business interruptions as well. So these are just some of the parties that could suffer losses. And we're looking at making claims. There are also cargo owners of the cargo on board the vessel at the moment who may also suffer some claims or suffer some losses, who would like to make claims. And there are also cargo that is not on board the vessel, which is stuck at the moment, looking at potential losses as well.
We know that 90% of cargoes is insured. I mean, what's key in determining who gets what and how much they get?
Well, everybody will have to bring their claims, and then you have to apply all the claims to an applicable limit at the material time. You know, when the court decides that yes, you are entitled to limit or liability, then all the claims have to be channeled to that limitation fund. So then there's a apportionment done at that time. So it's very hard to say how much you recover now.
Matthew, to be sure that ships collide often enough, is this collision, is this accident any different from what you've seen before?
Well, it is different because it happened in a narrow channel. So some questions could be asked as to why there were no additional precautions taken, such as why was there no escort tug? Why wasn't a blackout anticipated for vessels, huge vessels transiting this very narrow channel? So some questions could be asked there. And what other steps could have been taken to prevent such an incident? Yeah. So of course, on hindsight, everybody is clever. So these questions would be raised as to why precautions were not taken to avoid an incident like this when it is probably foreseeable in a busy channel like this.
Matthew, thank you so much for your assessment today. Matthew, Christoph, Raju, partner, and Dennis Matthew on what transpired in Baltimore. Let's do a check on Indian markets. Been trading for about 4 minutes now. Taking a look at where the benchmarks are at this point in time. We have the Sensex in positive territory, pretty much in line with the rest of the benchmarks in India. The Indian rupee trading at 83.31 versus the USD. Pretty flat right now, but we know that the Indian rupee trading at record lows. Plenty more ahead. Keep it here with us. This is Bloomberg. The CEO of AstraZeneca says the pharmaceutical giant will continue to support China's biotech industry even as the U.S. pushes for decoupling of global supply chains. Speaking to us at the Boao Forum, Pascal Sorio told us he sees innovation growing in China.
In the last number of years, we have brought our medicines to China to help patients. But in the last 4 or 5 years, innovation has boomed in China, and it has given many opportunities for us, but also other global pharma companies to partner with Chinese biotech companies, take these products and bring them to patients around the world, in Europe, in the US, in Japan, everywhere. So, you know, we really focus on making sure we bring patients new medicines.
Before we get into some of the geopolitical issues, how fundamental has China become in the global pharmaceutical industry?
Well, actually, it's not yet tremendously fundamental, if you want to say it that way, but it is becoming rapidly very important. Certainly, the U.S. will continue to dominate innovation in our sector. There's no question for quite some time. But I think in the world, the second biggest provider or innovator in pharmaceuticals will be China, especially with new technologies, cell therapy, gene therapy, what we call antibody-drug conjugates, oligonucleotides. In the old days, we were bringing small molecules, antibodies, and that's what we did for many, many years. In the last few years, large number of new technologies have emerged, and that's where the biotech companies here in China have focused.
What is going to be the ramification, the biggest ramification of the Biosecure Act in the United States if it does become law? And essentially, this legislation that's going through Congress would essentially ban Chinese pharmaceuticals from getting federal contracts if they are deemed to be of concern on national security grounds. Does this benefit you, or is this bad for the global pharmaceutical industry? Because it essentially, at the end of the day, will limit access for patients who need particular drugs.
Well, I think it is always important to try and facilitate collaboration in science and the exchange of information and the sharing of new data and the sharing of new inventions. So I don't think it will necessarily affect us because we are sourcing those products. We are basically developing them. We're going to manufacture them, and so we will manufacture them in China for China and some countries, but we'll also manufacture them in the US or in Europe for the Western world. So those will be very, very, segmented activities. The fact that the product was invented here doesn't mean the product is necessarily sourced from China for the entire world.
So that's an important delineation, essentially, because this law could prevent Chinese pharmaceuticals that are developed here from going into the world's largest market, that is the United States.
Yeah, we have very large supply chains, and we are organizing ourselves so that we can actually supply the United States and Europe independently, and that's what we do. And we also are building our presence here in China, so we can actually supply Chinese patients independently. So I think the fact that a product is invented here doesn't mean it will be manufactured and supplied out of China.
CEO Pascal Soriot with Bloomberg, Stephen Angle at the Boao Forum. We are on Currency Watch. Let's take a look where we are in terms of the yen. It is recovering some of the loss today on the back of Japan saying that it is willing to take bold action to support the currency. All options will be explored. Earlier, the yen, of course, touched its lowest since 1990 versus the USD, getting ever so close to that 152 level where we saw intervention. We're also keeping a watch on other currencies. The one at the lowest since November. The Bloomberg Asia Dollar Index also lowest since November. That is it from Bloomberg Markets Asia. Daybreak Middle East and Africa is next. This is Bloomberg.